This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here with Soraya Darabi of Trail Mix Ventures. Soraya, thank you for joining us.
Hi, nice to be here.
Great. So what was your background before investing in early stage companies? What did you do before this?
Well, like a lot of VCs that I admire, I began my career in journalism. I was an intern while at Georgetown University for the WashingtonPost.com. And then I worked at Condé Nast to help them understand internally the Reddit acquisition. That was my favorite part of the Condé Nast job, working on Reddit. And then moved to the New York Times to help position the New York Times on social media for the first time back in 2007. If you remember that era of SOMO low, so social, mobile, local, and Web 2.0, it was the most exciting time for convergence and social media. And it was also the most devastating time in the economy. So simultaneously, I was reading articles from the business section of the New York Times on what was happening to Wall Street. But my friends and I in technology were acting like it was Bacchanalia because we were so excited about building products that would connect the world to one another. And from there, I worked for a cloud computing company that was later acquired by Facebook. That was Lucky Break. And went on to co-found an app that some people fondly remember in Silicon Valley called Food Spotting, which was acquired 2 years later by OpenTable and later Priceline. I became an angel investor in 2011, mainly because I saw a lot of my friends' companies underfunded and started to invest not based on any kind of academic approach. I just used my sensibility as a thought leader back then on what was coming around the corner in terms of technology. Now, remember at this point, I was on the GE Digital Advisory Board. I was starting to give speeches around the world on what's next in tech. So I had a pretty good pulse from attending conferences far and wide on new innovation and decided to just trust my gut. I was the first woman to invest in Casper, the mattress company, and exited last year, so pre-IPO. Early investor in Gimlet Media, which sold to Spotify, a handful of companies that had meaningful acquisitions. And through that experience, investing in over 20 companies and leading a few SPVs into a strong realized IRR, LPs began to come to me and they said, we like your deal flow, we like your network. Could we help you put together a microfund? So all of that experience is what led to me becoming an investor, but I would never be an investor had I not met my partners.
That's great. It sounds like you had a broad range of experience and have a great team with you there. So what excites you right now?
Well, right now I'm excited about Trail Mix Ventures and our second fund, which we're newly investing out of. We invest in purpose-driven companies focused on, again, you mentioned it, the future of living well theses. So for this thesis, we've broken our investment purview into three categories. We invest in sustainable well-being, which is ultimately improving quality of life through technology. That can be community-enabled technology, companies focused on waste and recycling, smart city investments, anything touching mobility and transportation, supply chain and logistics, or next-generation food innovation. 1/3 of our fund is dedicated to what we dub the care economy, so next-gen healthcare, but also companies focused on elder care, pet care, child care, and personal care. All combined, it's close to an $8 trillion market, so too big to even fathom. But if you go very, 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 very granularly down to the earliest stage startups that are addressing these markets, you're going to find some really interesting purpose-driven companies that we were proud to back in Fund 1 and will continue to back. And then last but not least, we're interested in the future of work, but pertaining to how do we redefine the way we work. So we're interested mostly in the 1099 economy, in new technologies that address the workforce, and the workplace all in one. So that can include technologies focused on inclusivity and diversity, globalization, remote work, or just generally interesting businesses rethinking 200-year-old industries through digitization.
Great. So you meet a lot of startups out there and a lot of investors. What's your advice for people investing in startups? What do you tell them to do before they write that first check?
Before they write their first angel check?
Yes.
I'd say it's equal parts doing your homework and equal parts gut. And we had a professional poker player in my family growing up, which I'm always grateful for. My dad's good friend, who we called Uncle George, and he always told me in poker or in gambling, you have to fold more hands than you play. The most disciplined investors in the world are those that are okay letting good deals go past them. They know when to seize the moment, however, and go all in if something feels right. So I really do trust my gut, but I don't just show up unprepared into a conversation with a founder. Before I meet them for the first time, I do my homework. Who are they based on LinkedIn and social media? Whom do we know in common? Am I excited about the space in which they're building a company just based on that intro paragraph they emailed me or a friend told me about via text? Have I seen innovations in this industry before? Have I seen companies in similar domains falter or succeed, and why? And if you enter into the conversation prepared, but also really lean into your gut, that usually works out well as an angel investor. But as a VC managing other people's capital, we have a much more attuned process, a much more thorough due diligence process.
So on the other side of that table, what's your advice for people running startups? What do you tell them to do before they launch that company?
Oh gosh, where do I begin? When a founder comes to us saying, I'm starting a company from scratch, help, I usually say there aren't enough hours in the year. But I do like to get a sense of where founders feel like they are super skilled. What is their ninja strength? And where are they most vulnerable? And if a founder can open up to you, even in a first conversation, and say, hey, I'm a great engineer, and my business partner is an awesome product person. Together we built, I'm making this up, Twitch. Or we built something really fantastic, an API that Twitter used, and ultimately we sold and then recreated internally for a large organization. All of that is well and good. But then what I sense is maybe their vulnerability or maybe what their team is lacking and their core DNA are folks who have particular skill sets around design, UX, marketing, community. What some VCs dub as softer skills, I think are absolutely necessary in today's environment. You can no longer succeed with just a kind of quick and nimble product, build fast and break things, a la early days of Facebook. In today's environment, you also need a brand, a voice, a tone, an identity, and a reason for being.
Great. Well, let's talk about the state of investing in startups. How do you see the industry evolving, and what changes do you see coming up?
Well, we're entering into a very interesting time. It's 2020. We just kind of hit what might be the end of a 10-year bull run in the public markets. And it was a good run for a lot of startups for a long time. A lot of early stage companies with an idea on a napkin or the equivalent, a very nice keynote deck, were raising on double-digit valuations, mainly because they told a good story and they could spin a good tale. But we at TrailMix have long preferred founders in non-obvious geographies who are not the world's best salespeople initially, but can be coached into becoming great presenters and oral storytellers. And rather, we try to find people who are deeply passionate about the companies that they're building and understand that raising at a lower valuation in your first round actually makes sense because you're setting yourself up for success in the long term. And you're creating a reasonable valuation for your next investors to buy into and the investors after that. So I think a reconciling is happening in the industry, trickling down from the public markets, where we will see valuations take a 20, 30, or even 40% haircut this year. But I don't think that's a bad thing for early stage entrepreneurs. I actually think it's a great thing.
Yeah, it was getting a bit high up there. So it's time to kind of reset back to maybe what we call reality. And so it's probably a good thing in the long haul, although a painful thing in the short haul for sure.
Right. It's like that old song, back to life, back to reality. I do think that's the case, but it won't stifle innovation. In fact, we were speaking about the 1099 economy before. Freelancers are more prevalent than ever. And innovation comes from necessity. So we are at a point now where we're going to see some great innovation take place, mainly because the world is remote, working for themselves. And it's an interesting time. It's an interesting time to be an entrepreneur, and it's still a great time to be an investor.
Great. Well, let's talk about your investment thesis. You talked earlier about the sectors you're going after, but can you tell us more about the investment thesis you apply to those sectors?
Yes, absolutely. So we talked about sustainability, the care economy, and future of work. And with that lens, we look at companies that can fall into healthcare. So from our first fund, we invested early in Henry the Dentist, which is a mobile dentistry that goes to office parks to bring healthcare, mainly dentistry, to employees who want to use their lunch hour to get their teeth whitened or cleaned. And you might at first scratch your head and say, why would they want to do that? But if insurance is paying for it and it's convenient, employees will love this and see it as a perk, especially if they walk downstairs to the curb of their office and see a beautiful van that's been gut renovated to look like a luxury dentist's office where you sit on massage chairs and an Ivy League educated dentist looks at your teeth as you put on Bose noise canceling headphones and watch Netflix. So that's a classic play on reinventing a 200-year-old industry thanks to innovation. And the technology part is that everything is recorded, all the data and the CMS in terms of what clients need, all of that's captured on a really innovative dashboard. So Justin Joffe is the founder of Henry the Dentist, and we were proud to be the first check to precede that deal, which has since gone on to raise capital from Forerunner Ventures. We were early investors also in Parsley Health, which is very different, but it's a healthcare company as well. It's functional medicine rooted in science, built by the founder, Dr. Robin Berzin. Trailmix was seed, Series A, and Series B investors in Parsley Health. What we do is we partner MDs with nutritionists to give in-person and virtual telehealth appointments to people who would like to figure out what's wrong with them, but they don't exactly know why they think something is wrong. So it's not about going to a doctor saying, oh, look, hurt my arm. Is it fractured, doc? But rather, Parsley Health treats people with autoimmune disorders or something in their gut health that feels off. And they learn through a combination of herbal remedies and food as medicine and sometimes probiotics. You can cure 90% of ailments just with the right regime. So we're very proud to back Parsley Health, which has gone on to raise capital from White Star, First Mark, since Trailmix first invested. We're investors in KindBody, which is women's reproductive and fertility treatments. Since we first invested in Gina Partasi's company, she's gone on to raise capital from RRE and Google. Early investors in companies that are outside of healthcare. I mentioned elder care is a big category for us. Proud to be involved with Umbrella, which partners members who are 65 years and up with their own personalized task rabbits. And then on the flip side, helping parents with new babies and companies like Tiny Hood focus on getting a masterclass education online for how to be a new parent. And it's really daunting and scary to be a parent for the first time. So Tiny Hood gives you a suite of classes to help you figure out how to do everything from sleep train your baby to ultimately feed your baby the right foods. So that's a little sampling of our first portfolio. And that's just in the care economy alone. In Future of Work, we were early investors in The Wing, which is a co-working space designed by women for women. In the sustainability sector, we were very proud to back Gooder, which picks up excess food from large corporations and redistributes it to homeless shelters and low-income public schools.
Well, it's quite a portfolio you have there. You deal with a lot of startups. What would you say is the top challenge most startups face at this stage?
Well, there are umpteen challenges I would say startups face. First and foremost, I think startups right now are really not tuned into not only how to raise capital, but what kind of language is required and what kind of personality is required to raise capital. It's not a level playing ground out there. It's not very fair. There's a lot of ageism and sexism and honestly racism in the venture industry, which I've come to learn both firsthand and as a VC. From my check writing power position now, I'm very proud that 65% of our founders at Trailmix Fund 1 were diverse, either women and or minorities. But I could have guessed that back in the day from being a founder of a tech company 3 times over and learning the hard way that it's not the same for everybody asking for capital. So sometimes you have to learn the playbook, learn the right language, and then sometimes you just have to know the right people. What I'm hoping is that technology, as it always will and always has done, democratizes investing. And I'm talking about more than just Crunchbase and AngelList. I'm hoping that real data shows us that we've been biased for so long with how we've made investing decisions, and there are smarter ways to put capital to work. So I would just start by saying, as usual, do your homework, read some great texts out there on the best forms for fundraising, whether it's the Y Combinator blog or the old Venture Hacks Guide to Raising Capital, or blogs like Fred Wilson's on AVC, or textbooks like The Business of Venture Capital. It's really important to kind of know your audience and study up on what they're looking for before you ever meet them.
Great. Well, you see a lot of applications and sectors out there in the market today. If you had to pick one or two that you think are good immediate opportunities for investors to pursue, what would you put at the top of the list?
I think that Investors have a world of data at their fingertips, but nobody's synthesizing it in a really sophisticated way. So I referenced already on this call textbooks that I've loved, blogs that I've loved, dashboards like Crunchbase to help me understand who has received funding and from whom, or larger platforms like PitchBook, which comes out with excellent white labeled reports, CB Insights, of course, but nobody's synthesizing all of that information into verticals for me and allowing me to store it into one repository. So I think there's an opportunity out there for an entrepreneur who really understands the VC space to help us come up with our own platform for research and thoughtful decision-making processes. Maybe the company be called DD for due diligence. But in terms of the applications I use with my team Trello to keep us on track and to project manage how we're looking at companies. We use Copper, which used to be called ProsperWorks, which is our CMS for sorting through deals and opportunities. Of course, we use Slack to communicate internally in real time, as does everybody, I suppose, at this point. We use Google, the suite of Google, unbelievably so. I don't think there's been a Word doc I've made in years now that hasn't started on Google Doc because I collaborate with so many people, so many founders. So we use traditional suite of technologies, nothing too fancy in our day-to-day practice, but they're essential.
Sounds like you have a very good list of tools you have there. In the last few minutes that we have here today, what else should we cover that we haven't?
I don't know. I think we've covered everything that your audience might want to hear.
Well, great. Well, appreciate you taking time to join us today. How best for listeners to get back in touch with you?
Your listeners can follow me on Instagram. It's just my first name, Soraya, Soraya, or Twitter. It's my first and last name together. I typically respond on Twitter if somebody sends me a question proactively. Otherwise, you can always add me on LinkedIn.
Great. We'll add those to the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
I would enjoy that. Thank you so much, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.